Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. The average American doesn't like the idea of high interest rates. After all, it makes it more expensive to borrow and manage debt. But rising borrowing costs are what banks live for. Not all financial institutions are built the same. One niche area income investors should pay close attention to right now are the business development companies, or they're usually called BDCs. We nickname these firms as alternative banks here at Income Investors because they operate much like traditional financial institutions. They borrow money at a low interest rates, and then management lends out the proceeds to customer at a higher rate. BDCs are financial lifeline for many small and medium-sized companies. Because of tax break, they're also a great option for income investors. Where a traditional financial outfit have to pay government between 25 cents to 35 cents in taxes on each dollar they make, under federal guidelines, BDCs pay little or no corporate tax on their earnings. In exchange for that benefit, BDCs must distribute at least 90% of their ordinary taxable income to shareholders. As a result, these companies have one of the biggest dividend yields around. So John, let's go right into it. What's your first high-yielding alternative bank for 2024?
Thanks, Mo. My first pick is Triplepoint Venture Growth BDC Corp. It trades on the New York Stock Exchange under ticker TPVG. It specializes in companies at the venture growth stage of investment, and it primarily focuses on technology, life sciences, and other high growth industries. And if you can judge a BDC by the companies it invests in, and you should really, it's tough to beat Triplepoint. It was an early investor in some of the tech industry's biggest names, including Facebook, Etsy, YouTube, Ring, and Shazam. And thanks to its strong net investment income, Triplepoint is able to reward its investors with a very generous dividend policy. Most recently, it declared a fourth quarter distribution of 40 cents per share, or for a yield of 15.30% on an annualized basis. The company last raised its quarterly distribution in the first quarter by 8% to, again, 40 cents from 37 cents per share.
And your pick number 2, Oxford Square Capital Corp, has a current dividend yield of 14.51%.
Yeah, Oxford Square Capital Corp trades on the NASDAQ under ticker OXSQ, is a BDC that invests in both public and private companies, invests in secured and unsecured senior debt, subordinated debt, junior subordinated debt, and preferred stock, and syndicated bank loans. The firm invests between around $5 million to $30 million per transaction, and it looks to exit its investments within 7 years. Strong net investment income helps provide shareholders with a reliable distribution. It currently pays a monthly distribution of 0.350 per unit, or 42 cents per share on an annual basis, for a current yield of, as you noted, 14.51%. These good times will continue in the near term. In November, the company's board announced distributions for the first 3 months of 2024 of 0.035 per unit.
The third BDC for 2024 is Monroe Capital Corp, with the current dividend yield of 14.39%.
Monroe Capital Corp trades on the NASDAQ under ticker MRCC. It's an alternative bank that provides senior, junior secured, and subordinated debt financing and minority equity investments, primarily to lower middle market companies in the US and Canada. The average loan investment size per company is around 5.2 million, with the largest loan actually being around 30 million. It's 515.4 million portfolio is diversified across industries, including healthcare and pharmaceuticals, business services, high tech, media, and banking. In early December, the company's board declared a fourth quarter distribution of 25 cents per share, or $1 on an annualized basis. And again, as you noted, that works out to an annual yield of 14.39%. Monroe Capital Corporation became a public company in October 2012, and it's paid its first quarterly dividend in December of that year, and it hasn't missed a dividend payment since then.
John, what's your fourth BDC pick?
The fourth pick is Penntpark Investment Corp. Now it trades under the New York Stock Exchange under ticker PNNT. It's a private equity fund that focuses on companies owned by middle market private equity sponsors with a track record of supporting their portfolio companies. Why middle market companies? The U.S. middle market includes nearly 200,000 companies that generates $10 trillion of annual revenue, and that's a third of the U.S. economy. And it's also the world's fifth largest economy on a standalone basis. Strong cash generation has resulted in a number of increases to Penntpark's quarterly distribution. Every quarter, in 2022 and the first 3 quarters of 2023. Now, on August 9th, the company declared a quarterly distribution of 21 cents per share. The 21-cent payout represents a 5% increase over the second quarter of fiscal 2023 and a 40% increase over the 15 cents paid out in the same prior year period. Now, if you look at the chart, it might look like its distribution plunged in October. It technically didn't. That's when Penntpark switched its frequency and from its distribution from quarterly to monthly, and that started in October. And frankly, most investors would rather get paid monthly than quarterly. The payout currently stands at 7 cents per month, or 84 cents on an annualized basis, for a yield of 12.77%.
Fifth pick, Trinity Capital Inc. has a current dividend yield of 13.07%.
Yeah, Trinity Capital is a BDC, trades on the NASDAQ under ticker TRIN. It's a BDC that provides term loans and equipment financing to growth stage companies. Now, a growth stage company is defined as having active equity sponsors, earning annual revenue of up to $100 million, and being past its risky early development stage. Thanks to the company's outstanding performance, it's been able to increase its base dividend for 11 consecutive quarters. Most recently, I think it was on September 13th, it announced a third quarter cash dividend of 54 cents per share. Now, this included a regular dividend of 49 cents per share and a supplemental cash dividend of 5 cents per share. Its current dividend payout is $2 per share for a, again, pretty frothy yield of 13.07%.
Thank you so much for these picks. Industry tailwinds have made alternative banks increasingly compelling. In just a year and a half, Federal Reserve has raised interest rates an unprecedented 11 times to a range of 5.25% to 5.5%. That's the highest since 2001. The Fed is done raising rates for this cycle, and it's very likely that it will cut in 2024. Currently, economists are projecting 3 cuts of about 25 basis points. Despite the cuts, the borrowing costs are expected to remain well above pre-pandemic levels for years. This is certainly bad news for people with credit card debts and mortgages, but it's good news for business development companies. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on our top 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.